All right, welcome back, guys. Holy smoke, it has been a busy morning. So much stuff going on, and yeah, it's been interesting. Should be a good day. Just a couple things that I want to go through with all of you here this morning as we're getting started. First of all, of course, is the disclosure, and I think that that's always prudent to start with. Remember that there's always risk in a trade. We never know what the market is going to do. We just try to react to it. And so make sure that you're position sized correctly. I feel like this is a dead horse that we beat over and over and over again. And yet I still have conversations, weekly DMs with you, some of you in this room, just in terms of how maybe you were doing things that you knew you shouldn't be doing, right? Over position sizing, or what I've had a conversation with mostly this last week is over focusing on one area. Talking to traders in here that have had large six-figure accounts, but just really focusing on one strategy with it, or one sector, or one approach, or one trade. So again, position size, obviously very, very important. We want to make sure that one trade never makes or breaks us, right? Other stuff to talk about here today. Let me bounce over here to my trading screen for just a moment, and just want to talk about a couple things here. And I'm going to roll back up here in the Discord chat. Yeah, I want to talk about a couple of things here. So one of the things that we have not talked, so obviously we've started with a very, 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 very narrow focus with this program, which was 0 day to expiration trading, the SPX, right? Monday, Wednesdays, Fridays. And we added the Tuesday, Thursday bonus trades. And then we've sort of added this separate channel. What do we call it? The off-topic channel in Discord to talk about other trading ideas and things like that. And I want to keep the focus pure here, which is why we're here and what you signed up for and what you want to get. But I also want to pay homage to the fact that we all have other things going on financially, or we should, right? No one strategy should be our sole focus. And there's other things to think about. And one of the things that you guys know is a big mantra of mine is adjusting, right? Going into never ever just assuming that I'm going to be right, but assuming that I will have a pretty darn decent shot at fixing or adjusting a trade if it does happen to go wrong. And so part of that process of adjusting is at its very core, at its very essence, it's delta hedging, right? And so I am primarily a credit trader, different strategies, whether it's a credit spread or just a naked strangle or what have you, but generally, selling theta. And so of course, as a credit trader, really, ideally, you want to be delta neutral, right? Now, if you're directionally trading, of course, that's a different thing. But for me, primarily, I want to try to stay delta neutral. And so one of the things that we haven't really talked about a lot, and partially it's because I don't really have a way to show it to you. There's an asymmetric trade coming through there. I don't have a way to show it to you really until now. And again, I'm bouncing around a little bit here, but this data feed that I'm going to be able to provide, I believe I'm going to be able to provide, where it's just a dedicated screen on a separate video feed. I think it's going to be through YouTube Live on a secure channel where only those of you that I give access to have access to it. But just my scalping trades and my position trades throughout the day. And so what I mean by that is it's really hard for me to show them to you in the Discord or record them in a trading channel or anything like that, because I'm doing them all day long. It's just boom, 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 boom. But I want to show you just some more static examples of what I'm talking about here, and then I'll show you sort of my overall examples for the last day or two, kind of how that's gone for me. But if we look at, let me just make sure again that I'm on the right screen. Yeah, I'm showing you my entry screen here. Let's look at this one right here, HYLN. So you can see here this looks like a covered call trade, right? And it is a covered call trade, but it's the ratio is off, right? I have sold 7 calls against these shares, which would imply that you would have 700 shares, but I don't. I only have 640 right now, right? So I'm adding and I am subtracting shares to this trade to try to keep the delta where I want it to be. And I wanted a little bit more of a positive delta there, right? So I've got a 170 positive delta there. I think I've got some other ones still going here. THCB, this is the opposite of that example, right? So you can see that, again, this is a covered call trade here. This expires today. But you can see that it's an over ratioed one, right? Or under ratioed, however you want to look at it. I've got 215 shares here, but only 2 contracts are covered, right? So it's a little variance there. Doing the same thing with Tesla here, adding, subtracting shares. And that's just to try to bring the delta back into balance, right? So if the delta is too positive, then I'm going to start to subtract some shares. If the delta is too negative, I'm going to start to add some shares. And I'm doing that all day long. And then with my overall portfolio, you can beta weight, right? And you can look at your overall portfolio and you can say, well, I've got 25, 35 positions open in my overall portfolio here. But I can look at my overall portfolio and look at what the delta of my overall portfolio is. Am I really, really positive delta in this? Am I exposed to maybe a downdraft in the marketplace? Do I possibly want to hedge to the downside? And so I use the E-mini for this. You don't need to use the E-mini. You can use other contracts. I do like to use futures for this, because you need to have the ability to control this overnight. You need to have the ability to continually trade overnight. Last night was a very good example of that. We had some big swings, decent swings. We had some decent swings in the futures last night. But the reason that I say you may not always want to be able or be able to use the E-minis is if you want to go buy one contract or sell one contract of the E-minis, it can cost you, $3,000 or more, depending on what your margin requirements are. Just depends on your margin requirements. But it could be even more than that. So it might be too much, but you could use a micro contract if you wanted to. But anyway, I just wanted to show you here just that kind of simple approach of hedging like that. Hedging my portfolio. Let's go look at the E-minis, and let's see. Let's go look at the last couple of days. So Wednesday through Thursday, and you can see my results there. And if you look at them, you can see really, really simple trades, right? The majority of these. Buying one contract, shorting one contract, shorting one contract, buying that contract back. Now there's 3 contracts, but generally it's one contract, right? There's 2 contracts, but usually it's just one contract at a time that I am going long or going short. And just that one aspect right there is brought in, you got $250 of commissions there, but still, gross, it's brought in almost $2,000 in income for me over the last couple of days. And it's usually at least $400 or $500 a day, just on that little bit of hedging, right? And so, it's really synergistic when you can, find a strategy or a way to make money, but that strategy is actually, as you're employing it, that strategy is lowering the overall risk of your other trades. Like, it's nice that this made $2,000, but the real purpose of this was to hedge the risk in my other positions, right? So I threw a short position on. You can see my timestamps here. I threw a short position on I believe yesterday, when the S&P was coming down, right? And it was starting to threaten the put leg on our what this week was a 3-day to expiration SPY trade, but it's normally a 4-day to expiration. So, that's an easy way to hedge, right? That's an easy way to hedge. So again, I haven't really had a way to show that to you guys, just because these things will just pop up all day long as you're trading. And so for me, the best way I believe to show this to you is just the data feed. So we'll talk about the data feed in just a second, but I just wanted to share this idea of delta hedging. Again, the first sort of go-to that everybody has on any trade of any kind is, where do I put my stop loss? And I'm just like, again, nothing wrong with stop losses, guys. There's not, you guys think I all hate stop losses. There's nothing wrong with stop losses, but why are you jumping immediately to the question of, now, how do I lock in my loss? How do I guarantee a loss on this trade? What's the best way to guarantee a loss on this trade? Because that's what you're asking with regards to stop losses. How do I lock in my losses, right? And I would rather just hedge that risk away. Now, again, I'm using E-minis to do that. And so, you got to have the capital to be able to throw out that trade to do that. But you can fix trades by doing overlays, right? Laying another trade on top of that trade. And the E-minis are a good way to do that. So I'm excited about that data feed coming to you. The other thing that I wanted to mention this morning as well is Alex Expo put up a couple of links here from the great book, Trading in the Zone. Such a great book, such an awesome book on trading, right? And it really is a powerful book. But I just wanted to, if you haven't read his post here, it's just up a little bit in the live chat room here, but check out the expert excerpts that he put on the book. But he talks about, I want to click on maybe the second one. They're both so good. And I've mentioned this to you guys a million times, but there's levels that you go through as a trader. And the first part was just learning the stupid trades, right? Especially when you get into options, there's so many variations of options, strategies, and trades that you can. If you just say, well, I'm bullish on a stock, right? Man, there's a half a dozen ways to Sunday that you can build a bullish options trade around that trade. So, step one was just learning all of these stupid strategies. And then step two, you try to implement it, and, you have some success, but you don't. And you want to take it to a higher level. And all these trading mentors that I had would say, you've got to get your head right. You got to get your head space right and your focus right, and the psychology right. And I'm like, man, that's all, to me, that was BS. That's just absolute BS. None of that made any sense. I cannot see how my mental state relates in any way, shape, or form to building a profitable trade. Trades are just math. And if the math works, the math works, so obviously I'm building bad trades, right? But we've talked about how our mental approach changes things. And I like the second quote that he put up here from the book. For your mind to be open to a true exchange of energy, you can't be in a state of knowing or believing that you already know what's going to happen next. When you are at peace with not knowing what's going to happen next, you can interact with the market from a perspective where you'll be making yourself available to let the market tell you from its perspective what is likely to happen next, right? At that point, you'll be in the best state of mind to spontaneously enter the zone where you're trapped in the moment of opportunity flow. But I love that when you're at peace, not knowing what's going to happen next, you'll interact with the market from its perspective, right? And we've talked about this so often. Every day, you guys see it every single day in the live chat, So what are we going to do with this trade? Are we going to add this leg into this trade? When will we be exiting this trade? And you guys know my answer. My pat answer is, number one, I have no idea. I have no idea. Number two, it depends, right? It depends on this. It depends on this. It depends on this. It depends on this. But the answer should always be, man, I have no idea. I have no idea. And we've talked about this, how as you gain specialized knowledge in any one area, and trading is no different, as you gain specialized knowledge, the more educated you get, the more uneducated you should sound to the rest of the masses out there, right? The 99%ers out there, because they look at you as the expert, and the questions that you get all the time, right? Well, what's the, you're the stock expert. What's the best stock to be in right now? And my answer is like, dude, I have no idea. I don't have a clue, right? Because you're implying that I have a crystal ball, and I don't. And anybody that tells you that they do know what the best stock to be in right now is full of it, because nobody knows, right? The only person that knows is the market, and they ain't giving it up. They ain't telling us. So we all seem to enjoy the hot mic situations here. I've still not figured out how to avoid those. But our original hot mic was still the best of somebody just like having a meltdown, right? And again, you look at that situation, you're like, okay, have you given yourself up mentally to the market in that situation? Probably not, right? Like you're freaking out, right? And so that, what do we learn from that? Well, there's probably a lot of lessons when you get in that, and we're all there, guys. All of us have yelled at the screen. All of us have yelled at the screen. Why are you not doing what I need you to do, right? But whether it's over position sizing or what have you, that's what we need to work on, really. And again, that mental aspect is so important. So I just wanted to reiterate what Alex had posted there a little earlier, and why it's important. What else am I talking about? We have a lot of trades going on today. We have an awful lot of trades going on today. So let's just kind of click through them here right now as the day's getting started, see where we're at, and just kind of touch base with them all. Okay. So we've got our CL trade. Now we just put our CL trade on. That's just getting working here. 26 days still to go. I mean, let's come back. Let's revisit this in a week, right? Let's let this marinate for a while. Let's come back, look at it in a week. It's a little bit more of a long-term trade for us. But 91% probability of success right now. And it is starting now to move into the profit zone. I think we're going to be really, really happy with that trade. It's really, really tough, guys. You guys know this, that you can build whatever kind of trade you want, right? You can build a trade that has sort of a lower probability of success, but ridiculous profit potential. Or you can build a trade that has really high probability of success, but it doesn't make you too much money. This was a nice combination. We got a little bit of both with this. Really, really high probabilities of success with, I think, a pretty awesome rate of return potential on it. So our CL trade is looking solid right here. Our silver trade, getting a little pop in silver right now today, but it's still looking solid as well. Got just about $200 of extrinsic value left in our silver trade. And 4 days left to expiration there. So, assuming that silver doesn't go crazy today, my inclination on the silver trade is to let it sit over the weekend, come back to it on Monday, kind of see where we're at there. And I think, again, if it doesn't go crazy today, I think Monday we can look at a pretty good exit point for the silver trade. I mean, that's a home run. It's already a home run, right? I got $5,400 in it, almost $800 of profit in it. That's a pretty good percentage, guys, especially for the period of time. Our wheat trade, we already knew that the wheat trade was a home run trade. It was looking amazing. The question really was, were we going to be able to let this darn thing expire on its own? Without having to pay the fees and the commissions to get out of it, right? And I mean, right now, obviously, it looks like we'll be able to. So, my goodness, though, that's the kind of return right there that you don't even want to calculate, because now you start judging every subsequent trade that you do against that one, and every other trade is going to be a failure now. But that was a pretty big, I mean, I don't even know what that is. I put up $6,300, brought in $1,800. That's pretty darn good rate of return, right? So pretty awesome there. Our Cgc trade is solid today. I know some of you have already exited that trade, but I don't need the $1,800 that I got in there. And so I'm just going to let that expire today. and it'll expire on its own. Okay. I know that, that most of you are still not in GameStop, but man, oh, holy moly. This trade is the freaking trade that just keeps on giving, up about $700 today, another $200 in extrinsic value there. I mean, seriously, this trade is $1,000 a day trade with like $12,000, $13,000 invested in it every day. $1,000, $1,000, $1,000, $1,000, $1,000. So anytime you can find a stock, I don't even know what it is today. Let's take a look at it today. I haven't looked at it yet today to kind of see where we're at implied volatility wise. I know it's coming down. Well, I mean, yeah, it's coming down, but still over 100%. You know, it's still over 100% implied volatility. So that's nice. What else do we have? Well, obviously we have our SPY trade, right? Our SPY trade is really, really well positioned right now. So we want to keep our eye on this. The market's kind of doing some funky things. It was down pretty good yesterday. And then, you know, Yellen came out and said we want 8 trillion, quadrillion, zillion more stimulus dollars thrown at the economy, and the market's pushed up a little bit today. But we're seeing a lot of tiredness take place in the marketplace, guys. I will not be surprised. I'm telling you right now, on my non-directional trades, mainly my iron condors, those kinds of trades, I'm only doing the call legs. Because this market to me looks like it's getting tired and it's getting ready to roll over and come back down. Not crash, nothing like that. I'm just saying that it's running out of steam on the top end, and the impetus is now to the downside. Okay. So our SPY trade right now looks amazing. It looks really, really solid. There's still $180 of extrinsic value there. Now, granted, guys, this week's 3-day expiration, which is normally a 4-day expiration, this was superior. This was a well above average trade. And that's because of the IV that we were able to catch when we put our first couple legs on here. Okay. So typically speaking, we're going to build these out at about a 10% implied rate of return, right? We way surpassed that this week. $6,000 into the trade, bringing in $800, way better than 10%. But a couple of you again have said, man, I don't know if this program is for me. I don't have enough capital to trade, or somebody mentioned earlier this morning, I don't have $25,000, so I'm subject to PDT rules. Maybe I'm going to go do the 0-day expirations with the E-minis. You know, is the cost going to be prohibitive? Things like that. Guys, there's nothing wrong with just focusing on the 4-day to expiration trades. Not just because the return is sufficient. Like, you should not get to the end of the week and go, well, yeah, it worked, but I didn't make enough. If you can make 40% a month, that's enough, guys. And that's the potential of these. But beyond the return potential, they're easier to adjust. The 4-day expiration trade, should we need to, is easier to adjust than a 0-day expiration trade. Had we needed to adjust the put leg yesterday, we could have done that at a credit. It wouldn't have cost us anything. It would have actually been accretive and brought money in. So, you know, stick with the 4 days if that's where you're at. I think it's still, from a bottom line perspective, merits doing. Okay. And then any other trade. Oh, and then Tilray. Tilray is my other one right here. That's just like $1,000 a day, $1,000 a day, $1,000 a day. And I don't know, I haven't looked at Tilray yet either today to see what the implied volatility here is. It's about the same. About 100% implied volatility, which is, you know, it's not the 300 to 500% on these things that we were getting. But guys, as long as these volatility levels stay at this levels, people are like, how long are you going to trade these? Forever. Anything that has implied volatility above 100%, why would you not be trading that? Like that's what you dream about as an option seller, right? So anyway, kind of an update of where we're at. We'll just kind of keep an eye on our SPY trade today. I don't think that we are going to need an early exit on it, but you never know. You never know, right? So we'll just watch it. And everything else is kind of status quo as well. Hopefully our wheat trade just expires on its own as well. No action needed there. So let me just quickly look at any questions that we have, guys, and then I'll sign off for just a little bit. We'll come back and look at our first couple trades for the day. Boy, got a bunch of stuff coming in. Let's see. Let's see. I think it just, okay. I don't think I see. Oh, there's one from Theta Carl. Do you put a new, I am putting new positions on GameStop and Tilray every single day. Every day I trade those things every single day. Yeah. I think SPY was a full iron condor this week when we entered. Yeah, I don't remember, Tracy, but that probably makes sense. You guys know better than I do. But I think that it was a full iron condor, and that's one of the reasons that we got a lot of premium up front, right? And we hit the IV on it just perfectly. Yeah, and Art, same on Tilray. I'm trading those every single day. I'm in and out of GME and TLRY probably 3 or 4 times a day on each one of them. Let's see. Yeah, I've started Theta Carl. I do share some of them with you, and you'll see my positions here today. But the problem is, and I don't remember who did it yesterday, but this is the problem. You can't replicate what I already have. And so when I'm adding to a trade, it's delta balancing or it's juxtaposing against what I already have. So for example, and I think they're going to be okay today, but you see on my Tilray trade here, I've got a credit put spread down here at 26. The darn thing is at 28 right now, right? Like that's close to the money right now, but it doesn't matter to me. It doesn't matter to me because I have no risk to the downside on the darn thing, okay? Because of the way I've structured my other positions. But somebody yesterday, I forget who it was, threw that trade on, put this trade on right here, this credit put spread without the remaining stuff that I already had. Yeah, Macho, it was you. So I think you're going to be okay today, but there's tremendous risk in that trade, right? So no, I actually shouldn't share them to you at all because it's not professional. It's not, that's the best way to put it. It's not professional, right? It's like trying to sell somebody a car and you're like, oh yeah, but that car doesn't have a steering wheel, but mine does, but you should be able to do the same thing in your car as I do in mine. It's just, you're going to do a trade that is not representative of what I already have going on. Anyway, okay, so a lot of stuff to do today. Oh, one other thing that I wanted to mention. So the asymmetric system, guys, it's done. The training for it is done. That will go up on my YouTube Sunday night, and then Monday morning. Monday will be the official rollout for that. And I've told you guys, those of you that are as sort of a bonus, those of you that are in this program and are also going to do the asymmetric system, I'll just build a database of people that are in both, and I will give you guys the access to the scalping program, that data feed. I'll just give it to you for free to try to help you out. I know that none of us are made of money, and it's hard to do all of this at the same time, but I think that you'll like that. And I don't know how much capital each one of you are trading with, but for me, that scalping program, I'm trying to make, you saw on my e-mini scalps over the last couple of days, I made a couple $1,000, but really with my scalping, I'm just trying to bring in $500 a day, $500 a day. So yeah, so Monday morning, that should be ready to roll out. I'm still waiting on Launch Pass and Discord and a couple little technical issues to make sure that we have the infrastructure in place for you guys. Just waiting on a couple of things here, but I think Monday morning we should be ready to roll it out. So other than that, guys, yeah, we'll be back here in just a little bit. Let me just bounce over to the marketplace for just a second. It is a little interesting today. You know, we had the sell-off at the end of our last trading session, and then the futures really took a little bit of a nosedive. I was thinking at one point last night that we would be able to exit our 3-day to expiration SPY trade today at a profit, but just barely at a profit. And we'd have to right at the open, get out and just get whatever we could take. And then of course, Yellen came in and with the stimulus plan, and we're up a little bit now today, but we're giving that back a little bit. And again, every technical indicator that I'm looking at is telling us that again, we're not you know, ready for a crash or anything like that, but everything is just showing that we're really tired. The market is really worn out at this level, this high level. And if you look at, this is interesting right here, just this chart right here. So you can see, make sure I'm on the right page here. Yeah, you can see the last 3 days of trading that we've had. Isn't that interesting? Isn't that sort of interesting, that stair step down sort of approach, is that we kind of sell off and then we come back, and we kind of sell off and then we come back, and then we kind of sell off and then we come back. But we are slowly sort of moving our way down, right? So it is interesting that we're finding strength throughout the day. We are finding strength throughout the day, but we're doing it at lower and lower levels. So that just implies that, yeah, they're still buying in the marketplace. People are still coming in and buying these dips, but there are more and more dips to buy, right? And we are sort of just topping out here. So it'll be interesting to see where we go here today. I might give the market here just based on where we're at. I might give us just maybe 10 or 15 minutes, maybe 2 or 3 more bars here to see what we can do with this level. And then we'll come in and look at our order page. We'll see what the skew is, the option skew is, where the premium lies. You know, is it on the call side, is it on the put side, and try to pick some strike prices to get us started for today. So we'll be back here, guys, in probably 10 or 15 minutes, and we'll look at our first leg. Okay, so guys, we're just still in a little bit of a wait and see mode. So you can see what the market's doing here. You can see that we're sort of forming a wedge pattern, and the trading range is starting to tighten up a little bit. That usually is a precursor for a move of some kind. So we want to just be patient here for just a little bit and see if we can get a break to the upside or the downside. So we're just going to hang out here for just a little bit longer. Okay, guys, we're going to start out. We're going to kick this off right here. We're getting a little break to the upside. So we are going to start with the put leg today. And we're looking at the 39.05s by the 38.95s. Make sure you're not looking at the AM expiration. That's where you're going to get messed up at. So it is the February 19th expiration, the 0-date expiration. 39.05s by 38.95s. Delta on that is 14 delta. And NAP price right now is 40 cents. Mid price is 55 cents. Again, I like to leg in with about 1/3 of my capital that I would normally use. I got about 50,000, 45, 50,000. I'm going to be liquidating some positions here as we get closer to the expiration point today. So may have a little bit extra capital. So I'm going to shoot for maybe 45, $50,000. Try to start with about a third of that. And so I'm going to try the mid price right now of 60 cents, and we'll just work it down from there. Just a little bit off, it looks like. You know, close. I'm going to come down to 55, and it would, boy, it'd be nice if I could get a 55-cent fill on that. And I do. That's what I get. So I probably should have been patient for the 60, but I got filled at 55, and so I'm going to get that into the trade cap here for you guys. Let's see, here we go. Trade inputs. Okay. All right, we are up and running, and just want to see what my numbers are on this. It's a little bit easier to keep track of this way for me, at least. Replicate that order. So just about 18 grand into the trade, and 977 net. Okay. So we are up and running now. And then I do still have, I still got a butterfly sitting in here. I don't know what the value of that is right now. Ah, it's creeping up. It's into the credit now, so that's a good sign. Still 5 days left in that. Mid price would be the 39.10 level. So really not too far off from where we are. Oh, I'm sorry, guys. Tracy, my bad. Let me come over here to my order page. I guess it doesn't really matter at this point, does it? But I do have that SPX trade in there. So we got the pull leg in here. And I do think that we'll get a decent chance at getting a call leg in here. So we'll see. I was just saying, and again, I apologize for being on the wrong screen again. I need to check that every time just before. But I do have this butterfly going on in here, with 39.10 being the mid price of it. And I was just looking at it. It's just now breaking into the credits. Obviously, you put them on at a small debit. Now it's starting to move into the credits. It does still have 5 days left in it, so it'll need to work for a little bit longer to see what the results on that are. But always, butterflies are always interesting trades, right? So we're in. We'll let this trade work for just a little bit here, and then we may be able to get a call leg in as well as the time progresses. Let's get into our expiration date here. Here we go. There's our put leg. And call leg right now obviously would be something like the 39.45s, but a little early to pull that trigger right now. It would be preferable to be at the 39.50s, but the premium isn't there to justify that. So we'll just wait and see for just a little bit here where we go. Just going back through the Discord here. Sorry, blue collar drummer, I missed your question there. I think I was talking earlier in the day, but it's not a stupid question. It's an interesting question. So, you know, the question that he has is, are the SPY, the SPX, and the E-minis all tied together? And the answer is yes. They all are tied together because they're all based on the same basket of 500 stocks, right? That doesn't necessarily mean that they move together. They do move separately. And so you say, well, why would that be? They're tied on the same things. Well, the E-minis, the futures contract, obviously they trade overnight. And so you've got, you know, buying and selling pressure there where there's going to be a disparate number between what the futures are at and what the actual cash spot is at. And the futures also reflect future optimism or pessimism, right? So you're always going to have a little bit of a different pricing there with the futures, even though they're based on the same basket. And then you would think on the SPY and the SPX that, of course, those would be the same. The SPY is just 1/10 of the price of the SPX. It's based on the same index, right? The difference is that the SPX, it actually doesn't exist. You can't, you know, if we look at, I mean, come over here and you can see, here's my order page. I've still got the SPX up. What's the bid ask and what's the volume on the SPX? Well, it doesn't exist. It's an index. It's a amalgamation of 500 different individual stocks, right? But as an actual product, it doesn't exist. It's a mathematical representation. Whereas the SPY is an ETF, it's an exchange traded fund, and you can buy and sell that. Now, they're based on the exact same thing. The SPY is just 1/10 the price of the SPX, but you will see some discrepancies with the SPY versus the SPX. Why is that? Well, the SPX is what the SPX is. It's just a representation of all of that, the math of those 500 stocks, capital weighted, put together. So it can't be fudged. It can't be pushed out of what it should be mathematically. It is what it is. The SPY can be pushed out of what theoretical fair value is because it's an ETF and people can buy shares in there. They can sell shares in there. Well, an ETF is just like anything else out there. When more people want to buy than sell, stuff goes up. When more people want to sell than buy, stuff goes down. There can be irrational exuberance or irrational fear taking place in the SPY that will slightly imbalance it from the SPX. It will push it up just a little bit higher than what spot price is or a little bit lower. It always equilibrates. It always comes back. But you do see a little bit of those variances there. So it is sort of it's a good question, blue collar. No question about your good question. Just seeing if there's anything else going on here. Question right. I don't think so. I think everybody's on the same page. Okay. So we're just going to hang out here for just a little bit, guys. I would like to see the market push a little higher to give us a little bit better premium in the 39.50s in order to look at a call leg. But we're not there yet. We're not quite there yet. So we're just going to kind of hang out for a little bit. Yeah, basically 2 hours early, Dan, is when the wheat trade expires. 2 hours earlier than what the cash market expires. Okay, just checking in a little bit, guys. We're still just kind of grinding here. Nothing really happening for the last, what, 15, 20, 25, 30, 35, 35 minutes. We've just kind of been grinding at this level here. And IV drying up, volume drying up. So, still early in the day. I mean, I don't want to be a pessimist and say that that's the only leg that we're going to get in on the day, but I don't know. We'll see. We'll see. Right now, I'm just looking at everything else we've got going. Everything else looks solid. So let's kind of let the market churn here for a little bit, see if we can get some movement. And I don't know, we might be able to add to the put side if we can't add to the call side. Again, still early in the day. So we'll just see. We'll wait and see for a little bit. Viking Dan, that's what we're looking at right now, is probably the 45s by 55s. See if I'm on the right screen or not. Bring it over here. Here we go. Yeah, so this is kind of what we're looking at, is the 39.45s by the 39.55s. But NAP price right now is 35 cents, and it would need to be a little bit better than that. So we'll be patient here for just a little bit. We do have some time, maybe an hour, something like that. Again, assuming that volatility doesn't just completely fall out of bed here, but we do still have some time. So let's just be patient at this point. What am I looking at here? Let's just do a quick calculation on just the put leg that we did get in. 977 net divided by my 18,000. Be about 5.4%. So still be a good day. But yeah, obviously like to get the call leg in. Like to do it a little bit, like to get the mid price of 45 cents. If we could get, in fact, we can go ahead and do that. We could go ahead and put in the order now at 45, and I'm just going to let it sit. I don't think that it's going to hit. Man, if it doesn't, that's okay. I'll let it sit there. So I've got 19 contracts on the put side. I'm going to do the same amount, 19 on the call side. And I'm going to do it at 45. We'll send that, and let's see how far. I don't know that we're terribly far off. It shows that it's working at the mid price of around 40 to 42. My ask is obviously 45. So we're not terribly off. If we got a little bit of a bump here in the marketplace, I think it would go. Mid price now down to 37, but I'm going to let that sit. So I'm not going to put that in the trade tab. I am going to put it in the live chat here, though, just so that you guys know what I'm working. And then if it does fill, we'll put it in the trade tab. Okay. So we'll see what we get there. Mid price now showing about 40 cents. We would need a little push here in the marketplace to get that filled, but I'm going to hold out for that 45 cent. Still got as I said, got about an hour in the day to still be able to get the premium that we need on that. So let it work for just a little bit. So it's kind of prescient here that we talked about this earlier in the day. Delta hedging as a way to adjust our trades. I'm going to put on a delta hedge here on our put leg because that's all we have in right now, right? Is the put leg. I'm going to put a little bit of a hedge on that trade. And let me bounce back over here. Oh, I'm already on my order entry page. I'm going to use the E-minis. Okay. And again, I'm using the indicators that we had talked about here. I'll just show you what I've got on here. I've got the HOLB and the OLHB study that we talked about previously. I've got pivot points on here as well. And so this is giving me a sell signal here, a very short term. This is a 5-minute chart. It's giving me a very short term sell signal here in the E-minis. And so if if you're concerned of pressure on the put leg, one of the ways that we could hedge that is to short the E-minis, okay? Now, if you short the E-minis, that's about a $3,000 short. Okay, that's what it's going to hit you with buying power wise. If that is disproportionate to what you're already trading, you could use the micros, the MES, which is just the micro version of that. And that would be $300 for each one. Okay. So I don't know that I'm going to pull the trigger on that right now, just because come back over here to the chart. And of course the chart, our technicals, they're what dictate everything that we do here. But it does seem to be holding here a little bit. We'll see what this candle does right here, and we'll see what the next couple of candles do. But that's an easier way to hedge rather than rolling and adjusting positions. If you just want to balance out your delta, it can take more capital to do that, but that's one of the reasons why we only go in a third, and a third, right? So I'm just going to come back here to my order entry page, and I'm going to go back to my E-minis and just look at it from a chart standpoint. And we'll just watch this here for just a little bit. It's holding in there right now. And so again, if it pushes past, maybe right there, then I would short one of the E-minis. But that's kind of what I'm looking at. That's how I balance out the trades that I do in all my other accounts throughout the day. So again, we'll come back here to the chart for a little bit, see if this holds. If it holds, we may not need it. If it doesn't hold, we might need it. So we'll see. Yeah, it would be same day expiration. It's the E-minis, Paul. It's the E-minis. So the contract is the March 21st, March 21. So it's the March contract that we're looking at, because we'd actually be shorting it there. That way we've got no theta erosion. You don't have expiration to worry about, none of that stuff. But right now, it looks like it's holding. But I just kind of to walk through all of that with you guys so that you kind of understand where you can go. And, again, what's interesting, I'd have to go back and look at that, but you know, I showed you my E-mini hedges that I did over the last 2 days, right? That brought in about $2,000. You know, what's interesting, though, those again, they were just simply designed. Hedges are designed to smooth out the risk or tame the risk of your other existing trades. And yet, I think that, you know, those other existing trades probably made a sum total of $3,000 total. And so the hedge, the E-mini hedge, you know, making $2,000 made almost as much as the actual trades themselves, which isn't always the case, you know, and that's not what they're designed for. They're just designed to help you to hedge and rebalance risk. But anyway, kind of I think it's a more efficient, it's a more effective way to manage your deltas as they go forward. So we'll just keep watching it here, see how it goes. Lake Powell. So if you're using the E-minis, it's the exact same trade. It's the exact same trade. MES is the ticker symbol. You got it already there. Yeah, Lyndon, every brokerage account might be a little bit different on your margins, but again, regardless of what they are, they'll be consistent with the ES versus the MES. MES should be about half of that. I think here I am going to go ahead and just put on one because, well, I'm going to come back. Am I on the chart right now? Let's see, where am I looking? Yeah, I'm on the chart. I'm going to watch this next couple of candles here. We'll see if we can hold here or not. If we can hold here, then we probably don't need it. If we don't hold, I'll probably put it on. So we'll just sit and watch for just a little bit. Yeah, Lake Powell. So it's instead of, let me just bounce back over here. You already have it. You maybe just don't know it, but instead of the ES, you're just using the MES, which you already have. That's the only difference. That's the only difference. You could, Fuad, you could use stocks as well. You could use the SPY as well. There is no strike price. It's the MES. There is no strike price. These aren't options. This is the micro E-mini futures contract. There's no strike price. Okay, I'm going to go ahead and put that on. So I'm going to go sell one right now of the futures contract. So I've sold one. So you can see, let's get rid of all my closed stuff. Why is that? Well, that's still on the right screen. Yeah, it's still, unfortunately, it's still showing my profit for the day on my other E-mini trades, even with my closed tab hit. But I can open it up so that we can watch that. And we could watch it in here too. We could watch it on the chart. Right there. So again, every brokerage account is a little different, but you can see right here, you can see I'm short one of the E-minis at 39.19, and it's already a little bit in the money right now. So that, yeah, I was going to say that should be reflected there. I'm up $62. I'm up $62 on that position. So I'm a little bit hedged now here. Now, unfortunately, I have a software program called Option View, but unfortunately, it's not on this computer right here where I'm doing the Zoom. to where you can overlay positions. So what would be ideal now is to overlay a risk graph of our E-mini position along with our SPX position, and look at those together. Look at those as one singular trade, because that's how we need to look at this, okay? Absolutely, positively, you're probably going to have a loss. This is a hedge, right? So you're going to have a loss on one of these. You're going to have a loss on your 0 day expiration and a profit on the hedge. You're going to have a loss on the hedge, profit on the 0 day. That's by design. The real question is, you know, or the real approach is, we look at these both as a holistic trade, as a trade that is together. It's part of one trade. And at the end of the day, are we profitable or not? Okay, so we'll look at that. Yeah, and Doug, that'd work too. That'd work too. Let's see, like how you, yeah, short. You're shorting the MES. Yeah, $300. That's exactly right. And Rosalind, I'm not sure if you're talking to me or who you're talking to. Scorpio, so a couple of things. Number one, you're going to need and want a futures account because you want to be able to hedge your other positions overnight. So you need to work on that, get a futures account. You don't have one today, that's okay. You could short the SPY. You could use the SPY to essentially accomplish the same thing, okay? So is that put in as a short put option? No, Dino, there's no options here. We are shorting the E-minis or the micro minis. There is no option involved. Yes, shorting E-minis. Yeah. Okay. So just to review again, we do have our put leg in, right, on our SPX trade. Our put leg is down around the 39.05 level. So 16 points down from where we're at right now, which is still okay. You can see my numbers here. We brought in just under $1,000 of premium, and we're down about what is that? $600-700 now. So not quite to a 1-to-1, even a 1-to-1 ratio yet. But I am up. You can see on my E-minis, I'm up about $62, $37. So again, we'll just watch that for a little bit. Johnny, with the 19 contracts, you're on the hook for about 19K, but the E-minis only move $50 per point, right? Is that enough of a hedge if we blast down 30 points and blow through the puts? So you guys remember, again, you are the insurance company. You are the insurance company. You get to decide how much insurance you want to have. You could insure this all the way to where if the market crashes, the insurance pays you more than you lose, right? And that would be expensive. That would be expensive insurance. Or you can start like I did, where you say, I just want to tiptoe into it. But you figure out how much you want to spend on your insurance. But you get to set up your deductible. Rishi, I have one contract today, how to manage that hedge. I would use the MES. Use the MES. Sin, can you show us how did you short the E-minis? Yeah. Well, there's no strike prices on, you know, what's the strike price on a stock? right? The strike prices are on options. So to short anything, I have the I have the SPX right now. It doesn't matter what it is. To short anything, just click on the bid. Well, we can't short something that doesn't exist, right? Let's go to the E-minis. Click on the bid. And you can see your order will populate right down here. And it'll ask you, what are we doing? Are we buying something or are we shorting something? Well, we're shorting something. What's the quantity? The quantity is a -1, right? Because you're selling, you are shorting. What price do you take the hedge? There is no price. It's the current market price for your E-mini. At the money would be a reference to options. There's no options involved here. So you put on a date on that short. No, Dino, dates are applicable to options. This is the current futures contract, which would be the March 21st contract. There's the position. You can see the position right there. There's no strike prices. It's just, I'm just short one contract. Okay, just short one contract. Mr. Alex, I always wonder, like, you're not in, you guys, some of you are not in Zoom, but you know what we're talking about. How does that work? Yes, let me type this in for Mr. Alex. Sin, there's no date to choose. The current, if you type in /ES or /MES, it will pull up the current contract. Oh, thanks, Dino. I appreciate that. Just shorted a micro, but Phil's still working. So you're gonna do it at a limit price when you short. It shorts at a limit price, so you can see what your pricing is when you put that in, and it has to hit that to fill. Yeah, so you might have to adjust your price, but the market is, if we come back here for just a little bit, kind of interesting right here. I mean, it is still selling off here, but we're back down here to this sort of resistance level. And we say selling off, right? We were up on the SPX, what, 15, 16 bucks, and now we're up 8. So we've given back 8 points, really, which is not a ton. Not a lot, but we're seeing that it's starting to work here a little bit. If I come back to my screen, I'm up about 75 bucks now, up about 100 bucks on the E-mini contract. And what are we about? Still about, we're short the 39.05s. So we're about 15, 16 bucks away, $15 or $16 away from that strike price. So I'm going to come back over here for just a little bit. Come to my order entry screen, and up about $125 now on the hedge. And I'm going to look at this screen right here. So this just has my hedge on it. Okay, shows my short position right there. I shorted at 39.19. We're at 39.16 now, and still sort of in sell mode here. So we'll watch this for just a little bit. Scorpio how much quantity of stocks to short the SPY. So you're going to have to look at your own position there and kind of figure out where you want to balance that. I think somebody was just mentioning that earlier, that one contract is not going to fully hedge you. You need to decide how much money you want to spend on insurance. Okay. I started with one contract. If I need to here, I'll ramp up another couple of contracts. But right now, the market's just kind of hanging out here. I know it looks like and it feels like we're in a big sell-off mode, but really, again, still up $6 on the SPX. And this is kind of the level that I'm interested in right now. So obviously it's where we're at right now, the level that we're currently sitting at. But this was the previous low here as we opened up and sold off, and then we bounced back. We're back down here again. So I want to watch that level now. And it's interesting for a couple of reasons, right? Number one is ideally with my hedge, I could see a turnaround here in the marketplace. I could see some strength building at this current support level and take my hedge off at a profit, book a teeny profit on my hedge, and then, if we had to, maybe put it back on later at a better price. So we'll just see, we'll watch this now, watch this level for a little bit and see if we can get some support here or if it just keeps pushing lower. No, I needed to enter that hedge, didn't I? Yeah, and Johnny, so your margin requirements will generally jump by about 4 times if you do overnight holding. Brokers have what are called intraday charges, and we've gone through this a couple of times, but yeah, we probably, because we won't be holding the 0 date expiration overnight, we probably won't be holding our hedge overnight as well. So let me put in my hedge trade here. That was my bad. I probably needed to enter that into the trade tab earlier, and I just didn't get it done. That's my bad. Okay, I got that in. Yeah, so Dan, just to let you know on that, it is the CME. Get rid of that for just a second. Come back to my order page. So now I'm up almost 275. I'm up almost $275 on my short position in the E-minis. Market's breaking down now below that level. There's a big break down below. So now we're at 39.15. We're $10 away from our put leg. So I'm going to probably here, if we break, I'm going to go ahead and probably pull my short leg if we break down any further than this. So on the pull leg, I'm probably going to pull that short leg if we continue to break down below this. Let's see. What was the question? Oh, Dan, intraday charges for futures. So the CME establishes margin requirements for futures contracts. And so they set that standard. But brokers can and will modify those agreements. And They can make them more stringent in situations, or they can make them less stringent. They actually can make them more flexible, which most of them do. And so you have with most brokers what's called intraday margin, which is how much money you have to put up to do a futures trade. And that is a greatly reduced number for intraday, right? So as long as you're closing it out at the intraday, at the end of the day. If you hold that position overnight, most brokers are going to bump your margin requirements by about 4 times, about a 400% bump. So that's fine. If you, I mean, I trade the E-minis. We all know that the futures are more expensive, right? But I trade the E-minis because I need that ability. We all need that ability to be able to manage the trade overnight. And so as long as you understand what the margin requirements are going to be, if you want to hold it overnight, that's fine. But just understand that it will increase by about 400%. Lake Powell, what do you think about the calls? I don't think anything about calls right now. This is the last place to be putting calls in right now. There's zero premium in calls right now. There's nothing there. If we go look at so you do a couple of things, right? You would do a couple of things if you put a call in right here. And let's see, you're looking at the 40s and the 50s. 40s by 50s, it's 30 cents on the nap price. So it's not enough. It's not enough premium. If it was 45 cents on the nap price, yeah. But right now we need a little bit of a rebound to get the reward that we would get with those to be commensurate with the risk that we're taking. So I'm going to come back. I want to make sure again, I know I'm bouncing back and forth here, but I want to come back and look at, okay, there's my hedge. It's up about 250 bucks. Let me just look at that for a moment. I might be tempted right here to cash in my hedge. In fact, I think I'm going to. I'm going to cash in my hedge and book that profit on it. So I just did that. Let me put that in the trade tab. Okay. So I closed out my hedge, and now if I need, and I booked a profit on it. You can see that I shorted it here at 39.19 and I got out of it at 39.15. We'll see if we can look at what the profit. Unfortunately, you can see that I've got other trades going on in there that I already was doing today. So that trade was not a $900 profit trade, but it's about, I think, $250 was the profit on that particular trade. I guess we could break it out in the history, couldn't we? And just look at let's see. There it is, right there. 200 bucks. Yeah, made 200 bucks on it. So we'll come back here now and we'll watch the chart and we'll see if we can build any support off of this level here, or if we have to re-add another hedge into the trade. So we'll just watch it a little bit. Do you have a, Rosalind, what's your specific question? Steve, what's your specific question? Give me some specifics so I can help you. I know this is, I believe it is. I believe it's the first day that I've shown you guys this adjustment approach. So I would imagine that you would have some questions. But be specific. Don't just say you're lost. Tell me what it is that you're missing. Steve, once I go to the MES page, I click on the value, then I click on the short side. Just click on short. So let me come back over here. I'll show you. So MES, there's your micro contract. Click on the bid. Click on the bid, and it'll queue up your order right there for you. You're going to short one contract or two contracts or three contracts or whatever, right? And it's about 300 bucks a contract. Okay. Stefan, it shows me 20K. I don't know what that means. Rosalind, still not answering me back. Yeah, I mean, and again, you know, the cool thing about hedges, I like to maybe sometimes change the verbiage or change the phrase from hedge to insurance, right? Cool thing about insurance is that we're the insurance agents, we're the underwriters. You can, you know, I could have put in 10, right? I could have put in 10 hedges and made $2,000 and made more than the put spread that I was trying to cover could have even made, right? There's obviously a lot more money involved in doing that. So it just kind of depends on, you know, how much protection and how much money you want to throw at the trade. Guy Brush, yeah, you always lock in a price. It's always a limit price. Limit price is what it will go at. Yep. MES works great, Jess. Just 1/3 the price, right? Well, yeah, Rosalind, let's not do something that we don't understand. It's you know, and again, it comes back to what we always talk about, that none of the stuff that we do here is really hard or difficult, but at certain points, it's always new, right? And when something's new, it's new, so it's hard to sometimes figure out at first. But this type of hedging, it's the easiest thing you'll ever do, guys. All you're doing is buying a contract or shorting a contract, or two contracts or five contracts or 10 or whatever the case may be. But you're just buying or selling contracts, or one underline of the E-minis. Yeah, Dave. So if you don't have intraday margin, or you don't have portfolio margin, what you would want to do is the micros. Do the micros. 1/10 the amount. 1,200 bucks. Okay, I'm going to watch it here for just a little bit, guys. Let's come back to the chart. And if we need to load up on some more hedges, we'll do it. But I'm going to watch it here for just a little bit, maybe one more candle. Yeah, guys, I want to reiterate it again. I know we've touched on this a couple of times here, but everybody's margin amount is going to be different. Every broker is going to treat you a little differently, depending on who you're trading with. So don't focus on the difference. Focus on what is appropriate for your buying power. Okay. Okay. Still just watching it here for just a little bit. It's trying to find a little bit of support here, but it doesn't. I don't know if it's going to hold or not. So if it doesn't hold, if this level doesn't hold here, let's see if I'm on. Yeah, I'm on the chart page here. If it doesn't hold here right in this area, I'm probably going to go 3 or 4 contracts as a hedge to the downside. But we'll watch it here and see what it does. Air Force One, the broker is not giving you a default price. He's just giving you whatever the current price is. Whatever it's currently priced at the midpoint is what he's going to give you for a limit price. So it's a fair price. It's a fair price. Okay, I'm going to put on a bigger hedge here. I'm going to go probably 5 contracts short on the E-minis. And let me just watch this candle for just a second here. Am I on I'm on my chart page. Let's watch this candle and see what it does. You can see this is the previous day. This is yesterday's trading. And so, here was our open. We popped at the open, came off, came back up, and now we've sold off here for most of the morning is what we've been working on from our sell. We're right back now to sort of that break-even point on the day, just, down about $1 or so. But sitting right on this sort of previous day's support level that we came down and touched a couple of times yesterday and were able to hold. So let's watch that for just a little bit. Again, down about $1, $1.50 or so on the day. And if we push below that, which it looks like it wants to, we'll watch it here. If it If it can push below that, I'm going to load up on a little bit bigger amount of the E-minis. But it's just kind of hanging out here right now. William, we're using futures right now. We're hedging with futures. Yeah, there's no, again, guys, we're using the actual futures to hedge here. There's no options. There's no strike prices. There is an expiration date, but we don't worry about that. That doesn't factor into our trading. So don't worry about expirations. Don't worry about strike prices. Don't worry about premiums. There you go. DMC, you got it. You got it. Okay. Well, I don't know. We're back to holding here again, sort of at this break-even point. We'll just sit here and watch it for a little bit. It is interesting how that level so coordinates. I'm going to go look at it. Let's look at it on our chart over here inside of our trading account. And maybe see if we can go out over a couple of days here. Yeah. Okay, let me flip the screen over here. There we go. So there's that sort of stair-stepping effect down that we've had. What I am interested in seeing now, and this is another aspect here where this can come into play. Using hedges can come into play, but it can also come into play with regards to maybe building you a little bit better risk-reward ratio in a trade. So you can see my indicators here. We're still in sell mode. Everything's been a sell indicator here for quite a while. But if we can come back here, flip back over to this chart. If we can come back here and build some support here to where we could get a buy signal to the upside, it might be preferable from a risk-reward ratio. It might be more advantageous for us to go long an E-mini contract rather than go up and try to find a call strike price that we could sell, because right now there's no premium in those. So we'll see. I'm gonna come back to this screen here, and based on the price action that we have right now, we would need a decent move right in here for a fair number of candles. These are 5-minute candles here. But we would need a fair amount of those to be able to get a buy signal coming back in. But yeah, could be very, very close to buying an E-mini here as a hedge now up to the upside. Wendy, you've got it exactly right. You push the bid to short and the ask to buy. I'm going to see here. I'm going to give this a shot. See if we can catch a little bit of a rise here. And I'm just going to buy one of the E-mini calls. Or, see, now you guys have me doing it. There's no calls. There's no calls. But you see that order is working, right? So you can see there that my limit price went in. Okay, I just got filled. So let me just quickly put that in the trade tab here. Okay. So that one's in. We'll see if it works or not. We'll see if we can get any carry through here. Bounce back over here to the screen, our chart screen, and we'll see if we can get some lift here. See some questions here. Synarix, how confident are you all in that 39054? Looks real tight. Never confident. Confidence is the death knell. Just look at the charts, look at our indicators, and follow what they say. Wendy, I can't seem to change short to long. Well, so to go long, you just click on the ask, and it will give you a buy. You could do sell, or you could do buy, either one. Get over here, show it to you. Come over to my chart for a second. Okay, so let me get rid of it. So to go long, you click on the ask. So it'll load up a buy order for you. To go short, you click on the bid. It'll click a sell order for you. You can bounce back and forth between those. You could change a sell to a buy. You could change a buy to a sell. So it's pretty intuitive, pretty straightforward there. We're in a buy, not a sell. This one is a long position, so it's a buy. Buy to open, sell to open. Yeah, you're basically buying stock or shorting the stock. Yeah, that's it right there. Buy to open, sell to open, buy to close, sell to close. Those are the 4 orders that we would get, right, on any transaction. So I'm going to come back to the chart for just a little bit so that we can watch this. It doesn't look like I'm getting the follow through. It looks like we're still kind of hanging down here at this break-even point in the marketplace. But it's trying here to find a little bit of stability here at break even. So we'll see if we can get a little bit of a push. Okay, I'm just going to watch it here for a little bit. One of the things, Benny, you're talking about buying a long put, and we could do that as well. I like the what would you call it? Not just the simplicity, but the efficacy, maybe a little bit better, of using the E-minis right now. And so we'll probably stick with that here. If it continues to push here, it would probably be a combination of maybe pulling our short leg in our put and loading up on maybe some more bearish positions here. But we'll watch it here and see what it does. Again, now we're down $4, $3.75, something like that on the, well, let's see, that's the E-minis. Let's look at the SPX and see, about $4 on those. So we'll see. Again, we're back to, if we look at the chart, once again, we're back to another level here, which is, well, we are on the chart here. we're back to this again, this level of consolidation from yesterday. So we'll see what it does with it down again about $4 right now. And we'll see if it can find some support here. It doesn't, again, probably pull the short leg, go with some bearish positions in the E-minis. But watch it here for just a little bit. Okay, we are back just as we speak to trying to build a little bit of a buy signal here into the S&P. It's weak. It's really weak, but it's trying. Just now back into the positive. Well, it just slipped there. It's bouncing right now around unchanged. On the S&P. So we'll see if it can push higher here as we watch this. That's definitely helping our positions here. So the next, I would say the next probably couple candlesticks here, the next 10 minutes, really critical for directional sort of bias here. So let's watch it over here for just a little bit. On this chart for a little bit. I like bouncing back and forth between the different chart patterns, but I think this one gives us a little bit of an idea here, where our support is. And I think that that's important. And again, maybe the next two candles here. So, these are 5-minute candles. So looking at 10 minutes will give us a little bit better directional bias in terms of where we're headed. Tracy, the question is, what price are you looking at for on your hedge to sell? The market determines that. I mean, the market's at 39.12 right now. 5,000 is where I would like to sell it at. Yeah, it's just market dependent. We'll just take what support resistance levels we can try to find in the marketplace and make sense of it. But the market will determine the price, not really us. It depends. It depends. So Air Force One, it's an adjustment strategy. When you just close the short leg, you remove the risk of the trade, and now the long leg can potentially become a profit leg for you if the move is substantive enough. So that's the idea behind just closing the short leg. Okay, so we're back here once again. Let me flip back over to, yeah, no, I'm on the right chart. This level right here is about 39.07. It's about $1 away from where we're at right now. So that's our next line of defense, is right here. So 39.07, that's kind of the next level that we're looking at in terms of finding a support. It looks like it's headed there. So we'll see what it does with that level. If it breaks that level, then we will flip everything around. So we're sitting right on that right now, this sort of support level. It's continuing to push. So I'm going to go ahead, I'm going to pull my E-mini hedge. Whoops. There we go. I'm going to close that. Let me put that into the trade tab. I might re-enter that here. Whoops, 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 whoops. Look at my activity. There we go. Okay. So I booked a profit on the first one, booked a loss on the second one. That is in now. So I'm out of my hedges and I'm still just sitting in my put position. I'm going to come back over here. It's interesting how we hit that and got a little bit of a bounce. You can see the bounce right there. And that level was just, it was commensurate to with, let's come back over here. That sort of support level right in there. So that was the level that we're looking at. Sort of that, what was it again? 39.06 level, some 39.07 level right in there. So we'll watch that level. That's really our demarcation point. If we go below that, we need to start switching. So obviously right now we're in a bearish, or excuse me, we're in a bullish trade, right? We want the market to go up. And if it breaks below that pivot point, that again, 39.07 level, we probably need to switch to a bearish trade. So it would be more bearish in nature. Going short the E-minis, buying a long put, pulling the short leg, things like that. But we'll watch that here for just a little bit. I'm going to bounce back over here to this chart because I think it's maybe a little easier to watch over here. So we'll watch it. Jorge, I pulled the short leg. No, you're fine. I'm out as well. I'm out as well. So Yondo, your question, I'm trying to figure out my next SPX adjustment. Is it better? That's what we're just talking about. We just went through several options there. Pulling the short leg, buying a long put, shorting the E-minis. All of that would work, right? But we'll look at that here if we get down below that, what did we say, 39.07 level, I think is kind of where we're sitting there. So we'll see what we do here. I think I'm on this screen. Yeah, let's just leave it here on this screen for just a little bit. We'll kind of see what it does with this level here. That's been a big demarcation point yesterday, kind of where we're at right now. And we're just, this level from yesterday, just above that pivot point for today. So again, just kind of sitting right in that inflection point to where we're trying to see if we can hold and move back up or break down. So we'll just watch it here for just a little bit. Air Force One, so there are 13 technical indicators that we use to find support resistance levels, entry exit points. If you have not seen that video on my YouTube channel, go check it out. It goes through all 13 of those. What I happen to be, what I think you probably saw, let me bounce back over here for just a second, which by the way, just as we were speaking here, we got a little bit, we got another buy signal coming in. You see that buy signal come and go, right? You've seen it, is this the third time now, maybe? Third time, maybe. I think that I know for at least, for sure twice, that we've got a buy signal down here and then the buy signal disappears. It has to complete the candle. Okay, so it kicks in and then it confirms. But I think this is what you were referring to, maybe, what you were looking at. And these are pivot points, one of the 13 indicators that we do use. So check out that video. It'll help you quite a bit. I think it'll help you. And then, of course, let me know. Let me know if you have any questions as you watch it. CinnerX, just wondering, what do you view as the support level, and wondering if you're looking to exit the put credit spread position, given it has turned against us in the, well, this is all we've been talking about for the last hour. Yeah, this is our sum total focus right now. This is our entire focus right now. So right now we're looking if this support level holds. If the support level holds, we don't need to, right? So it's just all market, it's all market dependent. In fact, I'll come back, let's come back over here for a bit and we can look at it in this aspect. And we'll see if it holds. Yeah, if you, let's see, Mark, if you use Ninja Trader or anything that you can code or formulate, you can build those indicators inside of them. But as Jeremy just mentioned, it's only pre-formatted right now in Tastyworks. The math behind it is not complicated, but you've got to have the ability to code that. And so unless you're using a dedicated charting program, you're kind of out of luck. But you can watch mine. You can watch mine. So we're back. Switch back over here again. You can see that that teeny little pop that we're having here, kind of right again back into that consolidation area. We're back into where we've been, trying to get back to that break-even point. But if we look at this chart here, what we're trying to get here is get one of these candles to hold, so that that buy signal can kind of hold, and that we can get a little bit of lift. So we'll wait and see here. It's trying to help us out. It's trying to move in the right direction right now. So as long as that is doing it, we let it do its job and we just sit and wait. Johnny, interesting question, but first of all, I don't like bots and I don't like automated trading, but more importantly, it's impossible to do. You can't automate discretionary trading. So yeah, too much. You're just a little bit ahead of me there. Yeah, it's just too much discretionary involved to do it. I haven't even looked at the butterfly today, Tracy. It's been so crazy. Let's go look at it. Obviously, it's a lot better position now than when the market opened up, right? You're still kind of working that way, right? So I can't even remember. I'll have to go back and look at this one. I think it was like a 40 or a 50-cent debit, and now it's moving. It's getting into the credit. I think today was maybe the first time that this trade started to go into the credit zone. So it is messing up my ability here to look at our positions just a little bit. It's always easier on a 0-date expiration if my profit and loss for the day is the same as my profit and loss open position, but it's messing with it just a teeny bit, not enough to really worry about. So again, it's always, it's always nice to have overlays, right? It's always nice to have something on top of something, whether it's a hedge or it's a butterfly or something else, that you can have a trade that doesn't quite work out. And you're like, it didn't work out, but it did work out, right? Because of the other things that I had combined with that. But we'll see here. It's trying to get back to a positive number here on the S&P. It's having a tough time doing it. It's having a real tough time doing it. But at least for the first time in 2 hours, maybe, it's trying, right? At least trying to move in the right direction. So I'm going to come back to this chart. It's just a little easier to see. And we'll see what we can do with this level right here for just a bit. So Stefan, the question is, can you use long options on the MES instead of directional trades? So you could use options. Be very clear, that's still a directional trade. Long options are directional trades, right? And now you're subject to all other kinds of issues. You're subject to theta erosion, and you're subject to expiration. So it's not preferable, I would not say that it is a preferable approach, but clearly you can trade directionally with long option positions, right? Well, back to break even again on the S&P. And, we're just kind of rotating through these clusters. We're rotating through these consolidation areas based off of yesterday's trading. We had this level right in here, this sort of 39.10 level. Now we're up here at the 39.15 level. See if we can do anything with it. As some of you have mentioned here already, it has been just quite a little bit of a tug of war here, back and forth between the buyers and the sellers. No real clear direction here right now. So anything could happen, but we'll see. We'll see. So just again, kind of watching where we're at right now and seeing what we can do with it. Hey, I just wanted to chime in on a couple of things here. Let me bounce back over to my order screen. Because maybe you may forget when we're so focused on our 0 date expiration, but we've got a bunch of stuff going on today, obviously. And so just a couple of things of note. Our wheat trade is just about ready to expire. And you know what? Look at this. Like, let's just take a look at what it would cost us to close this wheat trade. Now, again, I'm closing all of the legs, and you know, maybe you wouldn't need to close all the legs. Maybe you could just close the short legs. And so again, this is probably exaggerated cost, but $500. And again, that's probably exaggerated because I wouldn't have to close all 4 legs. I could probably just get away with the short legs. But nevertheless, it's kind of nice that that is expiring here very shortly, fully profitable. And I don't even remember. Let's go look at. You guys probably know. I should just ask you guys. You guys are way better at this than I am. When we put this trade on, I don't remember when we put it on. February 9th, was that correct? Okay, so it's been 10 days. So it has been a little while, but oh my goodness, 10 days. Some of you might have seen the video that I put up on YouTube last night on, how probable is it? How real is it that you could really make $1,000 in a day trading? And I used our last 2 0 date expiration results as an example because I happen to make about $1,000 each one of those days, the last 2 days that we've done this. And as you guys know, they were not stellar days, right? They were not perfect days. On Wednesday's day, we only got, I might be mixing up my days here, but on one of the days, we only got a 1 leg in. And then on the other day, I spent almost 25% of our potential income on a hedge that we never actually ever needed to use, right? So not perfect days, and yet I still made $1,000 a day on just like $15,000 of capital, right? And so I use that as an example. I'm like, look, can you really? I got a direct message on my Twitter feed this morning from somebody that was like, so I mean, they saw it, like it's real results, right? And they're like, the average income in the United States is $32,000 a year. To say that you could make $300,000 or more a year trading is ridiculous and blah, 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 blah. And I'm like, well, I know traders that make $300,000 a month. I know a trader that his average P&L is about $420 a month, $450,000 a month is what he makes trading. Now they've got a little bit more capital than I have, but nevertheless, but I just like, you got to get out of this world, this mindset that you have. But anyway, the point of it is, I digress here, but the point of it is, it's kind of crazy, right? Like a 10-day trade, and we put up $6,300 and brought in $1,800. That was a nice trade. nice trade. Now, the other one that I did just want to mention is our silver trade. So if you are wanting to manage risk, if you are needing capital, by all means, go ahead and take your profits on the silver trade, right? My goodness, up another $100 today. There's only $100 for me. Again, I'm talking my dollars and cents here. There's only another $100 of extrinsic value sitting out there with 4 more days left to expiration. I'm going to hold mine because, again, good grief, we're at a 99.5% probability of success. It's going to be tough to do better than that. Did you get, Tracy, did you get a 5-cent debit on that? Did you just close the short legs? I'm wondering if you just closed the short legs on it, because there's probably, I haven't even looked at it. There's probably nothing. Okay. Wow. That's a good fill. And that's almost always a good thing, right? Like if you can get out at a 5-cent debit, get your money back, take the risk off the table, why not? But you guys know me. There's $100 still left in it. $48 approximately a day of theta erosion. It's a solid trade. Would I tie up $4,700 to make $50 in a day? It's not the greatest trade in the world, but in terms of the risk reward ratio, I'll take it. I'm going to leave that trade alone. I'll come back on Monday, see if I can grab another $50 out of it. Could I take the $4,700 and put it someplace else and possibly make more than $50 in a day? Well, of course, but at what risk, right? Versus, again, you got to be very careful. I don't want to say there's no risk in this trade. There's always risk in a trade, but I feel pretty comfortable with it. So I'm going to hold on to it. But I just wanted to share that with you guys, just keeping you updated. Silver trade, if you need it, if you want it, go ahead and take it. That's a good trade. And we'll just, our wheat trade, we just need to let it settle now and get us back some capital. That will be nice. It was a great trade, but this is, as you guys know, this is my 0 date expiration account that I'm trading here. And so I've used up a lot of my 0 day to expiration and my 4 day to expiration capital on these Tuesday and Thursday trades, which is fine. They've been amazing, right? They've just been awesome. Our CGC trade, same thing, my goodness, it's expiring in 2 hours. Is it worth closing? Let's say that I did it at a 2-cent debit. It's going to cost me $14 to close it. Just let it expire. Just let it expire. So we've got the wheat trade. I got some money coming back into the account now. Got the wheat trade expiring. Got the Cgc trade expiring. So that's all positive. That's all good. Our SPX trade is it's trying to help us out here. It really is trying. We're at the top of the hour, by the way. 2 hours left in the trading day. Unfortunately, unless we really get some help in the market here, unless we get some directional upside, this is going to be a nail biter. This is going to be going like right into the close. Like we're going to be having to run this pretty late in the day. Now, again, depending on how the move works, and this is why I like using the actual futures to hedge these. Okay. Now, again, keep in mind there's some things to keep in mind. There's some things to keep in mind, right? Not everybody can position size correctly using the futures because of margin requirements. You know, if you've got a $2,000 trade on and it's going to cost you $12,000 to hedge it, obviously the math doesn't work there, right? I understand that. And then you've got to go use shares. You could short the SPY. Okay, so there's other ways to do it. The futures just have better leverage. But the reason I like the actual futures instead of options on the futures is I don't need to deal with theta erosion, and I can hold it overnight. Now, again, my margin requirements are going to change, but that's okay. And one of the reasons that I say that is we've been, see what we've been having happen here, right? Now, we could go back even further in time on the chart. Let me bounce back over here to this chart. Oh, I'm already on it. Never mind. You can see what's happened here over the last few days of trading, and this has been going on for a while. You know, we open down, try to build back. We open down, we try to build back. We opened up here, now we're dropping, but now we're trying to build back. You know, it's trying to build back into the day. The buyers come back in later today, but we're stair-stepping our way down, right? I think that they're based on all the technicals that I'm seeing. I think that there is a greater than 51% probability that Sunday night, this next coming Sunday night, when the futures open back up, we may open up down again. And so I wouldn't necessarily mind going into the weekend short the market. I wouldn't mind going into the weekend short some E-mini positions. And so it would be a sort of a dual fold purpose. It would be to hedge the puts that we have going on right now, but it would also be in anticipation of maybe being able to hold those, you know, not close them out when we close out our 0 data expiration today, continue to hold them over the weekend and maybe continue to build a position around that going into Sunday evening. So there's just all kinds of thought processes that you can go through, but for right now, as we speak, an hour and 54 minutes left in the day. The market's trying to help us. It's trying here. It's not doing a very good job of it, but it is trying. It's trying to push higher, and it's trying to move us into the profit zone. We need to do, just so I kind of know where I'm going to be at on this overall trade for the day. Pop back over here. I need to get an idea of a cost basis. Yeah, because you know, it's obviously my E-mini is showing me that I'm up $462 for the day, but that's all of those trades. That's not the ones that just you and I participated in. And so I need to come back here. I might have to do a little bit of research on this. see what we can find. Okay, so those are our trades right there. I believe those are our two trades. Down 262 bucks. Made $200 on the first hedge, lost 462 on the next one. So I need to keep that in mind. Minus 262. I brought in 977 in premium, but I'm going to be down 262 on the hedge, right? So I need to, again, I know from an accounting standpoint, from an Airtable standpoint, we probably need to break those out and separate them, but I look at them as one trade, one result in terms of success or failure. Because the very idea of a hedge is that you shouldn't be making money simultaneously on your hedge and the position that you're hedging, right? One should offset the other. So in that essence, it's a little bit like a spread trade, a spread trade, whether it's a debit or a credit. Technically, one of those legs is always a losing leg, right? You don't look at it that way. You look at the trade as a whole and say, well, it made me money or it didn't. So we'll come back over here and just watch the chart for a little bit, see if it'll stay accommodating for us and help us, or if we need to throw another hedge on. I'm really pretty interested right now in throwing a pretty decent sized hedge on to the short side in the marketplace that I would probably carry through the weekend. I would carry it into Sunday's trading session. So we'll just see how the market reacts here and what we need to do. It is fortunate that, man, sometimes I'll tell you with you guys, when we get the trades in early and there's nothing to do and it's boring, and I'm like, holy smoke, when is this day going to end? Like, when is the market going to close? That is not the case today. It's been a busy one. And I just look at the clock. I'm like, wow, just an hour and 50 minutes left in the day. So the clock is ticking here, and we're going to start getting there, hopefully. Cross our fingers if the market will cooperate with us. We do need some help from the market at this point for sure. But we're starting to get here to where theta should start doing its job. So we'll just kind of sit back and watch for a little bit. Yep, Tracy, we got so many trades going on, right? We mentioned the silver trade. We mentioned the wheat trade. We did not mention our 3-day expiration trade, the SPY trade. Let's pop over here and take a look at it. There we go. 390.71 is about where we're at right now. Pretty solid right now, basically unchanged on the day. But boy, all of that theta came rolling in today, right? $500 today. Just $30 still left in extrinsic value. Take a look quickly here at what it would cost me to close this. Again, probably going to be cheaper than this because you wouldn't have to do all of the legs. I would assume. We can look. Yeah, there's still some value. Not on the call side, but on the put side, there's still a little bit of bid left in it. But 3-cent debit, it's going to be $100 to close that out. So I'm going to go ahead and hold it. I'm not going to do that. I'm going to go ahead and hold it to expiration. I think that we'll be okay there. So Getting a little bit of selling pressure coming back now into the SPX. I am going to go ahead and I'm going to put my hedge on that I will probably carry through the weekend. So I'm going to go short. Maybe 3. Let's start with 3. I'm going to go short with start short with 3 of the E-mini positions, and I filled that. And let me go to my activity, and I will put that into my trade tab. And again, you kind of need to work with whatever short you're working on. Whether it is selling shares or buying puts or shorting the E-minis like I am. Let's see, I'm just getting a little bit of lag here on my computer. Here we go. Okay. So I'm in on that. 39.07 was what I shorted it at. And that's already up a couple $100. So I'm going to hold that. I will probably hold that through the close here. You know, obviously it depends. It depends on what's going to happen, but that's what I'm looking at. So I'll watch this here for just a little bit. Bounce back over to the screen so that we can watch the price movement. All right, so I'm going to pull my hedge right now. It's up about $750. I'm going to go ahead and close that. Let me get over to that screen if you're not on it. Here we go. I got the order in. It's working. We're going to replace it at the current price. That should be something like a $700 profit, something like that, if I can get it filled. It's running away from me now. There we go. There we go. Okay, so I got my hedge filled. Let me get that into the trade tab real quickly, and then we'll talk about what that looks like in terms of the trade. Trade inputs. Come on, computer. There we go. This is really slow. Okay. And let's see what that looks like now. Try to keep a little bit of a running tab here. So again, just sort of a refresher. Put about $18,000 into the 0-date expiration today. Brought in just under $1,000 in net premium. made some money on a hedge, lost some money on a hedge, and was down 262 bucks on my hedge. But I just made like 700 bucks or something like that on my hedge. Let's take a look at it and try to get some more accurate numbers here. Try to get a refresh here. Okay. Then let's do a little isolating here. This was our first one, I believe. And then we want that back. That one is not. And we sold that one. Nope. I think that's correct right there. I think that's correct. I believe that's correct. So with my hedge right now, I'm to the plus side of about 200, what is that? 210 bucks. So up about 210 on the hedge so far. Okay. And we're an hour and a half left in the trading day. So hopefully, again, the market can cooperate with us here and we can get some theta starting to kick in. So you got to give me more details than that, D. I don't know what you're confused about. Give me some specifics so that I can kind of walk you through it. Let me know what your confusion is, but be detailed, be specific, guys, when you have questions. Yeah, I know that the hedging using futures today was a little confusing for some of you. It is interesting though. Of all of the delta hedging that we can do, it's the easiest. It's the easiest. It's the absolute most straightforward. But it's new. It's different, right? So, yeah. But everything looks good so far, guys. An hour and a half left in the trading day, and we might pull this thing out. So let's just sit and watch for a little bit. I'll flip it back over here to the chart, and let's watch our pricing for a little bit. All right. Couple things to note, obviously, at the top of the hour. 1 hour left in the trading day, and also getting a little bit of a bump here. Little bit of a bump. We are, if we bounce back over to our trading screen, trying to initiate another buy signal back in here. We'll see if it holds or not. Oh, don't have shoulder surgery. That's not a good thing. Yeah. So giving this another run to the upside, we'll see what it does. But again, just kind of hanging out, guys. Y'all just taking a nap, just relaxing. These are the days that make traders, guys. These are the days that make traders. And these are the days where you should be more emotionally detached than ever, because all we can do is read the data in front of us and react to it. When you can get to that level, guys, this is just another normal day. But this is trading. This is trading. If you don't want to be a trader, that's fine. My goodness, look at, let's go back. Look at the Cgc trade. So I don't remember what the time frame on that was, but that was a little bit longer trade. But you know, it was what, a 7% rate of return or something like that in that's pretty good, guys. Like, you can get rich. You can get rich no matter how little amount of money you're working with. If you can make 7% a week consistently, it's enough, right? It's enough to get you to where you want to be. But for me as a trader, I know that it's not that I want to be a day trader. It's that I have to be. I have to be, because it is a sensible thing to do. Let me explain that. It's a sensible thing to do because it balances everything else that I do, right? The Tuesday and Thursday bonus trades may not necessarily make sense by themselves. The 0 date expiration trading may not make sense by itself. My iron condors, my other positions, all the other stuff that I do, standalone trades, maybe they don't make sense, right? But if you can combine them, they do make sense. The hedging, you know, I mean, talk about day trading. If you were just going long and going short futures contracts, you know, that's a whole different risk parameter, isn't it? Than using it to hedge another position. So anyway, they all combine, they all work together, they all balance each other out in terms of risk. And so they all make sense together, but you got to do it as a holistic, comprehensive system, right? One complements the other, but you've got to, these are the days, guys, when you need to really work on just separating your emotions from the results, because again, if we're position sized properly, it's not like the financial risk is going to mess us up. It's the emotional, right? Oh, I messed up, I didn't work, I lost money, whatever. Guys, that's going to be every single day. And what's almost worse is the opposite of that, where you put on a full iron condor in the morning on something, or, you know, even just a normal iron condor, right? Like a 30 or a 45-day iron condor, and you put it on something, you're new to trading, you never done it before, you don't understand you're risking $10 for every dollar you can make. You just know it's an 80% probability trade, and you put it on, and you know, you put up $10,000, you never look at it again, it expires profitable, you make $1,000 on it, and you're like, oh my gosh, this is the easiest thing in the world, right? that's just as bad. You know, being that devoid of emotional involvement is just as bad. We really just want to get to the point, guys, where we just say, listen, I don't know what the day is going to give me, but I'm going to react every single day in the exact same manner. Every single day is going to be the same for me. It's going to be the same in terms of what I do. It is going to be the same in terms of my emotional investment in a trade. I've been doing computer work. I've been doing other trades. I don't look at today's trades any more frequently than I do any other day. It's just another day of trading, guys. And to the degree that we can kind of get that emotional detachment so that we make wise choices, because we make bad choices when we're emotionally invested, right? We do knee-jerk reaction type stuff. So anyway, we got about an hour, got 55 minutes left in the day. We do need a little bit of help from the market here. I still like the idea for me. Again, I don't know if it's applicable for you, but I do like the idea for me of carrying some E-mini short positions into the close and through the weekend into Sunday's open. And so I'm going to probably take advantage of this right here, this little jump up that we had. Let me come over to my order page. Probably going to take advantage of that to just load up a couple more positions on the short side. So I'm probably going to grab maybe two. Look at three, maybe three. I might grab three short positions here just to carry into the close to sort of help the put position that we already have open, and then probably more importantly B to carry into Sunday's open. So I'm going to put that in there. I need to put that into the trade inputs, obviously. If it will pull up. Here we go. Okay. And again, I know that, there we go, that's input now, that trade. I know that it does get a little convoluted here in terms of, you know, at the end of the day, trying to figure out where you're at on your darn trade. You know, did I make money or did I not? But again, you know, we would look at a spread trade. We would look at an iron condor that has 4 positions open in it. We would look at those 4 positions as one position, right? As one trade. We would look at that as one profit or loss. And that's kind of how I look at his adjustments as well, is that they all sort of combine at the end of the day. And again, that gets a little difficult now where my anticipation is that I'm going to hold this short position past today's close. Again, everything is subject to change, but that's kind of my stance right now. So we'll see how it goes here just in a little bit. Absolutely. MES is fine as well, Brian. You know, again, whatever works for your position sizing, right? MES at 1/10 the value, or even some shares of the SPY. You could even short shares in the SPY. They all accomplish the same thing in that as the market comes down, your hedge makes money while our put position loses money. Hence the nature of a hedge, right? So, okay, we're just back at it here now. I'll come back to our chart and we'll just kind of count this down here for just a little bit more. There's a nice push coming in. Look at that. I don't know. Let me bounce back over to my, I just lost it. I actually was showing green on my SPX trade there for just a minute. Now, again, I've got this butterfly in here that's kind of messing everything up. But we're getting close. I think we're getting close. We're getting closer. So, yeah, nice push up. Back to just about break even on the SPX. This is it seems like we've had a lot of movement today, but this is break even essentially right here, of about a half a point. So we'll see if this can carry through here. It obviously bodes well for our put position. So for me, ideally, obviously now I've got a pretty decent short position in the E-minis. I would like to, for simplicity's sake, I'd like the market to move up a little bit. We can get out of our zero data expiration puts today at a nice profit. And then I can start working on that E-mini position. So again, one of the things, I think Adam or somebody mentioned it, one of the things that's kind of nice, you know, we talk about how futures trade overnight, and of course there's advantages to that, but you also get, you know, those 15 minutes right after the market, after the cash market closes, to trade that position. And that's usually where you're getting some decent movement sometimes, you know, 5-10 points on the S&P up or down in that last 15 minutes. So I might have the ability there to add to that position a little bit. And then depending on what happens on Sunday night, how the futures open up going into next week, I could actually then start to sell puts against that as well. Here's the nice thing about holding actual futures positions, right? I don't have any theta erosion going on inside of them. I don't really have to worry about expiration. Now, futures contracts do expire, but I can roll it. It expires in March. And if I had to, I could roll it, but I would almost certainly not have still that holding in my account in March. But anyway, you don't have to worry about a lot of the stuff that you do with an option. But then I could start selling covered puts against that. And it could be, I think, maybe the best of both worlds here. But we need a little bit more of a push here. We need a little bit extra help to the upside to get our puts cleared out here at the end of the day. 45 minutes still left in the day. Market's moving in the right direction. You know, everything is moving in our favor right now. As you know, that can change on a dime. But right now, in terms of, you know, everything really we could hope for, it's kind of coming together for us. So we'll just kind of hang out here for a little bit and watch that. Again, anticipating that I'm going to carry this over the weekend, I'm going to add another short position here to my E-minis. There we go. And I will put that in my trade tab here. I don't know, Speedy, I don't know if it's coming after hours or not, but I do think that we're going to have some weakness Sunday. We may not carry it into the open, but this market's just tired. It's just really tired here at this level. And so I generally speaking, I have a lot more long positions in my bigger accounts than I normally have. And that combined with the market kind of getting tired here, I want to be a little bit more aggressive on my hedging on the downside going into the weekend. So again, it obviously is in place, and it's obviously here to try to mitigate some of the potential damage that we might have on our put leg, obviously, right? But it's more than that. It goes beyond that. This is a trade that I'll probably keep on and hold through the weekend here. So we'll see. You're tired. It's been a little bit more active. These are always the interesting days. I don't know if we have any or not, but these are always the interesting days when we have brand new members in our trading room. They're like, dude, I can't do this every day. I cannot do this every day. You know what? It's just pushing buttons like any other day, right? Though it's just pushing buttons, and it's the emotional baggage that comes with it that makes you get worn out, right? So, and we can divest ourselves. We can divest ourselves from that emotional baggage. It does not have to exist. Stress is a self-imposed emotion. So I'm going to come back here. Let's watch this SPX for just a little bit. We're getting close, right? Almost 35 minutes or so left in the day. The challenge, of course, is that we are a little tight, obviously, on our pricing. So we do need some help from the market. We need a little push here. And not a lot, 4 or 5 points. My goodness, 4 or 5 points to the upside would do amazing things to our trade. But yeah, it doesn't mean we're going to get it, right? So we'll see. We'll see. L29, I'm using the E-minis. I'm using the E-minis. You're saying ES or mini ES. That's just the E-minis. They that's what they're called, as the E-minis. So not the micros. I think maybe you're confusing the minis with the micros. It's just the ES. So Mark, we'll see. We'll see what happens on Sunday night. I'll keep you guys apprised. Every trade I do going forward here on this E-mini position, I will, I won't timestamp it, but I'll put it in the chat so that you guys can follow along what I'm doing. Just depending, you know, it depends, right? It depends on how Sunday evening opens up. If it opens up at a profit, I might just book the profit, take it and run. If it doesn't, I might continue to add to it. I might start selling options against it, selling covered puts against it to bring in income from it. We'll see. But if you were to ask me, what level am I short this market at on the E-minis? Let's come back over here for a minute. $39.0650. So that's my level that I'm short, is $39.0650. And this will mess up the charting and everything here, but we'll fix it here in a moment. So let's go pull the pivot points. 39.0650. So there's your market. Going back to June, there's the market. Now again, it's the E-minis, but you get the idea. 39.0650. That line right there is the level that I'm short at. That's the price action we've had in the last week. Yeah, I feel pretty good about that short position. No theta erosion, no expiration really to worry about. I'm pretty, in fact, the only thing I'm really kind of frustrated right now is that I got 4 instead of 40 short, but I might ramp that up on Sunday evening. We'll see. We'll see. So yeah, coming back here, let me bounce back to this chart. We are, as we speak, we are 30 minutes. Yeah, 30 minutes out from the close. Now I thought I just saw us pop into the green there for a second. It's toying with it. Our position is toying with it right now. So we'll see. We will see. But, you know, again, the market's trying, right? It's trying to help us out here. It would be a lot nicer if we were 5 or 10 points higher and 20 points later or 20 minutes later in the day, right? 5 or 10 points higher, 20 minutes later in the day, you'd all feel a lot more comfortable with this position. But we'll see. Half an hour left in the trading day. Well, look at that. Hallelujah. So we are, again, what screen? I forget what screen I'm on. Back at our resistance levels of the day. So that's good and bad, right? Like, it's really, really good that we're back up here. But I don't know how much higher we can push than this. That's been a pretty big level. It was a big level yesterday. It was an area of consolidation yesterday. It was an area of support yesterday. Been a little bit of an area of support today, big area of resistance today. We just hit that right there. You see that big wick on that candle, and we pulled right back down. So I don't know if we'll be able to break above that. It would certainly be nice for us if we could for our put leg, but you know what? We're breaking into the green. We are finally breaking into the green here a little bit, just a little bit. On our put leg. So man, just a couple more candles to the upside would be very, very helpful for us here. So man, we're clinging to this level right here for just a little bit more. Let's just watch it here and see if we can make some moves if we have to, or hopefully we can just sit tight, right? That would be the ideal situation. We continue to push a little higher here. We just sit tight, hang on for 25 more minutes and take our profits. Okay. Oh, we are so close. So close. Just about what, not quite 10 minutes, 11 minutes maybe out before the close. But man, we are in the green now. I'm just going to bounce back over to our screen over here. I don't know what's going on with my SPX trade, why there's such a huge differential now between my open profit and loss column and my daily profit and loss column. The only other thing I've got going on in there is my butterfly, and that shouldn't be affecting. I mean, it obviously is. That's obviously what's affecting it. But anyway, we're profitable. Just breaking into the profits now on our 0-day to expiration SPX with basically 10 minutes to go, right? So holy smoke, we are very, very tight on pricing right here. And so watch that closely, guys. Don't let it blow through here in the last 10 minutes, your legs, because we are so tight on that. I'm going to load up an exit order on it just because it's the prudent thing to do. We're at a nap price right now of 75 cents, a mid price of 55 cents. I'm going to watch it here for just a little bit, but be prudent, guys. Be prudent at this point. All right, into the last few seconds here of trading, and we'll see. We'll have to see at the end here where it actually settles at. But it's looking close. It's looking close here. It looks like it could be a solid day, getting a little bit of bump here into the close. Need to be above the 39.05 level, and we're getting a little bit of buying here. We've just got about 20 seconds left, and looks pretty solid here. We'll see. Getting very, very close here. And it's looking like it was solid. There we go. Now you'll have a little bit of movement here and it'll settle, but 39.0673 looks to be where we're going to probably end up at. So if that's our settlement, guys, we look pretty darn solid on the day. Looking pretty good, I think, overall. Here's what's exciting. Here is what is exciting. Remember, we said that a hedge is designed to not necessarily make profits, right? And yet I'm up $862 on my hedge. So we'll see where we end up at. I think 39.06 is where we finish. So pretty amazing day. If that is correct, my hedge is going up. I mean, we're selling off now after the close here. we're selling off even more. Yeah, I'm up almost $1,000. So I'm up almost, you can see there, I'm up almost $2,000 on my hedge today. And this should settle out. I think that we are, 39.06, 73 is our close. All of that extrinsic is coming in. So full profit on that. I'm just going to run some preliminary numbers. This is just an estimate. You guys all make sure that you do your air table today, please. I don't know if we have a provision. Man, I don't know. Maximus, you can chat. We can chat. We can converse back and forth here in the live chat. I don't know how to account for hedges because they're, a hedge by its nature is designed to lose money, right? Like you want it to lose money. And I don't necessarily want that, pushing against our profit and loss win ratios and things like that. But anyway, man, what an awesome day. I'm thinking that I'm up someplace like, I don't know, close to $2,000 on my 18 grand for the day. Over 11% for the day, I think, is what I'm up. So yeah, we'll let everything settle out, guys, and then please put your information into the air tab. Yeah, I don't know, Maximus, what to do on that. But anyway, input your trades. If you exited your silver trade, make sure you put that in. You make sure you put your results in for your wheat trade. Now it's got to settle still. It still hasn't settled, so it's not going to show yet. But put in your wheat trade, put in your 3-day to expiration SPY trade, and put in your 0-day today that just absolutely killed it. And then, I don't know, just take your hedge money and go buy something nice. I don't know. But man, it was an amazing day. It was an amazing week. What an awesome day. And I think, I mean, I don't know, guys, I could be set up for a $3,000 or a $4,000 profit coming into Sunday evening just off of my hedge still. So I'm excited to have that still on. But amazing week, amazing day. Thank you. I just want to thank all of you guys once again for participating in the program. It means the world to me that you find value in it, and I appreciate each and every one of you. So have a great weekend, guys. Don't spend all of your money someplace, or do spend all of your money someplace fun. I don't know. Have fun. We'll see you on Monday, and I will be letting you guys know in Discord just kind of what I'm doing with that hedge come Sunday night. So I'll keep you guys apprised. But have a great weekend, guys. We'll talk to you soon.